Hello guys, today I'm going to speak about a couple pieces of news that you should really be paying attention to. One is being the SEC delaying Fidelity's Ethereum spot ETF, and a couple of others. If you haven't already, do subscribe, drop a comment because you don't want to miss this news. So as I'm looking, the SEC delayed Fidelity's spot ETF for Ethereum, but they're expecting to have that in May. So the decision is actually going due to the rule change that would allow the CBOE BZX to list and trade shares of Fidelity's planned fund. Now, I noted that the proposed rule change was originally filed on the 17th of November of last year, so 2023, and published for the comment on the register around December the 6th, so, really a month ago. Now, I said that based on the dates that they could actually approve or actually reject or actually even institute proceedings determining whether if they should or should not disapprove the proposed rule change by the 20th, which is tomorrow. But it's now chosen to actually use a provision that's going to be able to extend the deadline by 45 days to March the 5th to 224. But what does that really mean? So, for example, let me move this. Okay, now Bloomberg, now his name is James Sifart. He is the ETF analyst. He said that Fidelity's delay was completely expected and asserted that late March deadlines really matter. Now, it looks like the fact that the SEC must either approve or reject VanEck's spot Ethereum ETF by the 23rd of May. So they said that VanEck and several other applicants actually gained some approval for spot Bitcoin ETFs on the 10th of January. Now, the success of that ETF actually doesn't make sure that Ethereum is going to get approved as well, but it's there. And so here we have the chart. Here it's like the 1 minute, or I'm sorry, the 1 hour. You can see how it's like actually moving. So trading at about on the 19th at 12 o'clock this morning, $462. Sorry, boy. Okay, so this is where it's trading right now. Hopefully, it will do a lot. If it does get approved, hopefully it would do a lot better than what Bitcoin actually did. And Bitcoin, speaking of, the price is actually dropping unexpectedly. No, really. It is dropping quite a bit. So to 41,000, it dropped. So that is about 3.45%, and that happened yesterday on Thursday, under 41,000. So it's actually extending its weekly loss too, as well, to more than 10%. Now, at the time of this, the price was trading around 40,896, and of course, the market cap's around 805 billion. But since that spot ETF got approved last week, there has been some major outflows that showed from Grayscale. But Grayscale actually has to liquidate a large number of Bitcoin because of the GBTC holdings. A total of that is around $2.2 billion, and it's moved out of GBTC for over the last week. But there was a statement by Scott Melker. He said that he had concerns about Grayscale's role in the market, saying that the asset manager is not actively dumping on the market. And Melker wanted to be very clear in saying that the selling of Grayscale's Bitcoin trust is initiated by individuals selling their GPTC holdings, and that made Grayscale to sell an equivalent amount of Bitcoin. Whatever. But he also wanted to highlight that it's not nefarious, but a fundamental aspect of the mechanics with the ETF. He also gave some insight on the dynamics at play and to provide context to the market movements involving Grayscale and its Bitcoin holdings. Now, the healthy development is showing this, and this is coming from these guys. BlackRock Spot ETF actually clocked more than $1 billion in inflows with just 4 days of launch, so that's pretty big. But the ETF strategist Eric, how do you say this? Balkunas has drawn some attention to other ETFs that's going on. So 9 of them to be specific, saying that they're highlighting also as well that there's a remarkable 34% increase. But the ETFs have defied the pattern and experiencing unexpected upswing in volume. And even he said it's not a good sign. Front GPTC's discount has also reversed the wrong way back up to 96 BPS, likely due to the selling pressure. But who knows what we see in the flows eventually. I kind of expected. All right. Also, we have Jim Cramer is giving a price warning. Now, Jim Cramer, he is a CNBC personality. Now he gave that warning about this as well. So Jim Cramer said that there's that warning, and again, he's really known for his very um, incisive financial commentary. It's really well written, but pointed out the troubling start of the Bitcoin sell-off. He said that someone's probably going to try to make a stand, um, but as well as we said last night, quote unquote, you can't have an absolute double in value by hundreds of billions of dollars in the anticipation of ETF, and then almost no one shows up. And there was a episode of Mad Money, and Kramer said that Bitcoin could be actually topping out, predicting a decline in the value. On the 12th of January, he also jumped on Twitter and actually said all of this again and reiterated his belief that Bitcoin had reached its peak. But the prediction ended up being accurate, and well, because it fell below around 40 grand. Now ETF they sell off in the news event, so the conversion of the GBTC, which we were just speaking about, $1.5 billion, and the JP Morgan analyst Nicholas, I can't even say that, Penegrzlu, have raised concerns about further outflows, potentially reaching around $3 billion total. So it could actually give more pressure on the Bitcoin price. So we'll have to hang out and see what's going to be if it's really going to fall through. Yeah, and that's what we have for now. Thank you for joining me. I will see you guys in the next video. So be sure to subscribe and drop a comment. Let me know what you think. Will Bitcoin fall back down to around 35,000 or could it finally get up above 50? Let me know in the comments below.